welcome back. This is Buy Now, Sell Now. We're answering all of your stock queries and filling you in with the top technical and fundamental recommendations. Well, the mid-cap index has definitely raised its gains, and as we speak, down we go for the frontline index as well. So it's not like it's some major crash, but we're definitely coming off from the high point of the day. Now we're struggling to hold our head above the green line, and sectors like PSU banks are now down 0.6%. Real estate has succumbed, and you also have energy and pharmaceuticals, which contributes on the downside. But let's keep it with some more trading calls, and Amar Singh is still with us. Let's find out what's in his technical radar and which stocks make it to your list, Amar.
Yeah, a very good morning. The first stock to look at is India Hotels. Indian Hotels is very strong technically on the chart, so this is a buy because across all time frames, be it in the daily, weekly or monthly charts, the stock has had a breakout. So any pullback towards 137, 138 can be used as a buying opportunity with a stop loss of 133.8 and a target of 146. The next stock to look at is Adani Enterprises. That's a sell on this stock because the stock has been witnessing profit booking as well as selling at higher levels, and also the stock seems to be capped higher towards the upside of 210. And technically it's weak on the daily chart, so any pullback towards 199, 200 can be used as a shorting opportunity with a stop loss of 205.5 and a target of 190. And the third stock that I would recommend is a buy on Wipro because Wipro, looking at the charts, it's definitely strong on the long-term charts. The short-term charts are also showing some signs of pullback after the correction it witnessed from almost 330 levels to 280 levels, and currently it's around 290, 92 levels. So any pullback towards 288, 290 can be used as a buying opportunity in Wipro with a stop loss of 283.5 and a target of 302.
More viewer queries answered, and the stock in focus right now is Sun Pharma. Ranjit has reached out to us, and says that he's bought Sun Pharma shares at 595. Does it make sense for him to hold on, or should he book out completely? Or what would be your verdict?
Yeah, I would agree with Mr. Chokkalingam that he should definitely hold the stock with a stop loss below 530 because technically the stock is looking positive on the long-term chart. So that's a positive. So the downside seems to be capped, one. Secondly, on the short-term as well as the medium-term charts, it's displaying some sideways movement. So the levels that he needs to watch out is, first is that 600 to 610 on the upside. That's going to act as a very strong resistance levels, resistance zone for his particular stock, and that's very close to his buy price as well. So that's one level he should watch, because if that is taken out, then the stock is headed higher towards 630, 640. On the downside, the low that was made on 6th February of 531. Now that should act as a very strong bottom for the stock. So he should definitely hold the stock below with a stop loss below 530.
Well, a large cap pharma stock which has underperformed substantially over a longer period of time has shown some bounce back from lower levels, and both our experts are suggesting at this point of time to hold. Let's move on from pharma to financials, and Rajiv Shukla in an email has written to us that he has bought 200 shares of Canfin Home Finance at a price of 540, and he's a long-term investor, and he's asking us, should he hold or moving from fundamentals to technicals on Canfin Home Finance. We are seeing, Amar, that stock has shown decent bounce from lower levels, crossed its resistance which are around 480, 490 zone, and volumes have also increased. Do you think that there are possibilities of stock doing better from current levels?
Yeah, see, what we are seeing in Canfin Homes technically on the charts is that, as you rightly said, that it's bounced back, and on 5th of February from almost 402 levels, it's currently around 516. So that's almost a 25%, more than 25% increase in the stock price. So that's definitely shows that there is something that's happening in the stock. One. Secondly, technically looking at the stock, both from a short-term and a medium-term perspective, I would say it's very strong on the short-term and the medium-term charts. Long-term charts are definitely some signs of caution because if you look at the long-term charts, they are displaying some mixed trends. So clearly reflecting that the upside would be capped. The level that he's bought, that's a very crucial resistance around 540 levels, because if that level is breached, then the stock is headed higher towards 570, 580. So if he wishes to hold the stock, then he should hold the stock with a stop loss below 480. As you said, 480, 490, that's a very strong support zone. So a stop loss has to be below 480, and he can hold on to the stock, and the level, as I said, 540. If that is breached, then he can expect around 5-6% rise. Ideally, that would be a level. If he gets, he should book profits.
Right, hope you've taken note. That's the outlook coming in on Can Fin Homes. You really need to take a call as to how you want to approach that investment. Amar is saying you can hold with a stop loss below 480, and Mr. Jokalingam believes that the valuation is stretched. He's not very positive on the stock, and you can look to sell. Let's move away from Can Fin Homes to Cox & Kings. Rahul Bajaj has emailed us a question on this one. Well, he's purchased 100 shares of Cox & Kings, bought at a level of 277, and now wants to know, does it make sense for him to add, or should he continue to hold on? Meantime, let's understand how exactly the charts are shaping up. And Amar, what do you make of the trajectory? Do you believe that it merits a hold?
Yeah, that's what I'm also recommending. That what we're seeing on the charts is that the long-term trend for this the stock Cox & Kings is overall positive, and but the medium term as well as the short-term trends, they are sideways. So the stock is in a range of 210 on the downside and 270 on the upside, because these are the crucial levels to watch out for, because till the time the stock doesn't take out the 270 level, it's not going to go any higher, because that's going to act as a very strong resistance, whereas on the downside 210 should act as a very strong support. So somewhere he should hold with a stop loss around 213, and it is trading sideways, and as I said, consistently trading above 270. Then it can trade higher towards 280, 290 levels, and since the long-term trend for the stock is positive, then he should hold with a stop loss below 213.
All right, a consensus call. Stay put in Cox & Kings, stop loss at 213, and Mr. Jokalingam sees a target price at 280. So stay invested, and I hope we were able to help you out, Rahul, with your question. Let's take a quick break. When we come back, we get you some top commodity calls. And do remember, if you have any questions or queries, simply reach out to us. You can email us, tweet us, connect with us on Invol or Facebook.